How's it going, guys? Welcome back to another video, and in today's video what I'm going to do is I'm going to go over imbalance and how you can identify imbalance within the market. So imbalance is a really simple concept to get your head around. It's one thing that I use personally for a confluence to my supply and demand zones and things like that. Some people use imbalances as a entry point. For me personally, I don't do that. Like I said before, I just use imbalance as a confluence to my supply and demand, and as a confluence to where price may return to at a future date. So first of all, what I just want to say is that inefficient price action and imbalance is said to be where BFIs, banks, financial institutions are entering the market, because as you would see in this example here, what's happened here as there's been a influx of sell orders within the market, leaving imbalances between these candles and these candles, because in the old supply and demand industry, the smart money concept, star trading, it's said to be when banks are entering the market, because obviously us as retail traders, we can't move the market like this. Even if everyone watching this video, all the subscribers on my YouTube channel, if we all hit sell at the same point here, there's absolutely no chance that we can leave imbalances like this within the market. So that's why it's said to be the footprint behind the banks entering the market. And it's just a confluence for me personally. This could be then a supply zone where I would later look to take trades from. But that's the overall overview of inefficient price action and imbalance. What I've done is I've just entered a couple of notes for you guys to enter down. So like other terms for imbalance and inefficient price action, you might hear inefficiency, you might hear imbalance, you might hear fair value gaps. There's many different names for this concept right here. People regurgitate information. They'll change names of things and add it into their courses and think, that they've come out with some revolutionary, concept. But in matter of fact, what it is, it's just all the same stuff. So, just remember when you're hearing, inefficiency, imbalance, fair value gaps, whatever it may be, it's all the same stuff. So please don't get confused, when you're hearing all these different terms for, the same concept. Another thing to note, imbalance is where there is a gap between the first and the third candle. So in this example here, on the efficient price action side, we have candle 1, we have candle 2, and then we have candle 3. So what you'll see is the wick of candle 1 isn't met by the wick of candle 3, which has left this gap, which is considered imbalance. On this, on this little bit of imbalance right here, so if I just mark it out. So on this imbalance right here, what's happened is this candle right here has become candle 1, this has become candle 2, and this will now be candle 3. You're just following price down basically, and candle 1, candle 2, candle 3, and for this one here, candle 1, candle 2, candle 3. So, it needs to be always a 3 candle formation. For example, this right here would not be in balance, because what you might get is, if I just copy and paste this, so what you might get is you might get price come up and it might end up closing and filling this gap right here. So this right here would not be considered imbalance until the next candle is closed. So that's just one thing that you need to keep in mind, that it's a 3 candle formation. And what price will often like to do is price will often like to come back and fill these imbalances. So if I just move this out of the way, so what we might see is we might see price come back into it straight away and then continue down, whatever it may be, or it might it might even continue up. But what you might also get is you might get price continuing the overall trend, and it might just come back at a later date. It can be a long time until imbalance is filled, but eventually it should overall end up being filled at some point. So as I said before, me personally, I use imbalance as a confluence for my supply and demand zones. I also use it as a confluence as to where price might return to at a later date. Some people use it as a an entry point, but for me personally, I don't do that. So what I'm going to do is I'm just going to go onto the charts and we'll see if we can find any examples in real life price action. So I've brought up this example right here because it's a really good example of the imbalance and then price returning to fill. So what we'll see is we get an expansion to the upside, and for me right here, this sell to buy candle would be a pretty nice demand zone. So what we've got right here is we've got candle 1, we've got candle 2, and we've got candle 3 being this inside bar right here. And as you can see, we've got imbalance resting right here. We've then got imbalance between this candle and this candle, so that would then become candle 1, candle 2, and candle 3. So what you'll see has happened is we've had an expansive move up. So in this example right here, what you could do because, imbalance has entered the market, basically on this candle right here. You could refine your demand zone to this candle, which is absolutely fine. But for me personally, what I like to do is I like to take the last, sell to buy. What you will then notice is that price has come up. It's come all the way back down. It's filled all of this imbalance right here. It's filled all of this, and then we've continued to the upside. What you'll notice is that imbalance, there's imbalance right here. There's imbalance pretty much everywhere within the market. Like I said, it's a really simple concept to learn, but it's also a nice concept to know about, in terms of using it as a confluence for maybe your supply and demand zones. And like I said, where price may return to at a future date. So again, if I just show you a few more examples, as you can see, we've got imbalance between here. Price has then, filled it at a later date. We've got imbalance right here, which, has been filled by this wick. That's just as simple as imbalance can be. It's not a difficult concept to learn, but it's also nice to know. So yeah, as always, what I would do is I would obviously go into my charts, just, practice marking out imbalance and just practice seeing it within, real time. You can go onto bar replay, whatever you want to do. So yeah, if this video did help you out, guys, please remember to drop a like on today's video. Subscribe to the channel for future videos, and without further ado, thank you very much for watching, and I'll see you in the next one.